I've got two reasons bank stocks are going to make a comeback in 2020, and I'm not the only one in on this action. Warren Buffett has over $75 billion invested in just 5 stocks in the financial sector. In this video, I'll show you how to invest in bank stocks and reveal Buffett's 5 best picks. We're talking bank stocks to buy for 2020 today on Let's Talk Money.
Beat debt.
Make money.
Make your money work for you.
Creating the financial future you deserve.
Let's talk money.
Hey Bowtie Nation, Joseph Hogue with the Let's Talk Money channel here on YouTube. A special shout out to everyone in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Okay nation, we're 5 videos into our 2020 stock sectors videos and I'm tired. Digging through hundreds of financials to analyze 2 sectors a week is a lot of digging. So for our look at the financial sectors and the best bank stocks to buy now, I got a little help from the biggest bank investor in the world. Warren Buffett has 44% of his Berkshire Hathaway portfolio in the financial sector alone. That's nearly $77 billion invested in bank stocks, payment processors, and advisory companies. And it's not hard to see why Buffett loves the banks so much. Financials are the cheapest sector in the market right now. This graphic shows the sectors by forward price to earnings ratio. And that dark blue line is the current price to earnings analysts expect over the next year, while the green bar is that 10-year average PE ratio. Clear at the end here, we see the stocks in the financial sector trading for just 12.4 times forward earnings, which is about even with the 10-year average at 12.3 times earnings. Not only is that the lowest PE ratio of any sector in the market, 37% cheaper than the nearly 20 times PE multiple on tech stocks, but financials is also one of only 3 sectors that trade within 3% of that long-term average. All the other sectors are 10 or 15% more expensive than those long-term averages. So financial sector stocks speak to the value investor in Buffett, but they also come through on another factor very dear to his heart: cold, hard cash flow. The financials spin off a dividend yield of 2% on average, with some of Buffett's picks approaching 4% dividends. That's money he can use to reinvest across the portfolio or in other projects. So I decided to let Warren do a little of the work for this video. I'll show you how bank stocks have performed over the last 5 years and share some financial sector funds to give you that broad exposure to the theme. But then instead of picking through the 2,400 stocks in the sector, we'll look at Buffett's bank stocks and pick the top 5 for your 2020 portfolio. If you're just joining us, we're doing 11 videos to reveal the best stocks to buy in each sector of the economy. I'm looking at each sector from tech to energy, consumer goods, and utilities to show you how to find the best of breed companies in each and create that diversified portfolio for growth and cash flow. Now this is hugely important because even though we're following the Oracle of Omaha into these bank stocks, you have absolutely got to have stocks in some of these other sectors. It's going to give you the diversification you need to grow your money while still protecting it from another financial market crisis. So if you're coming in later to the series, I'll link in the first comment below the video to the most recent video. I'll also be linking in the video description all the videos in the series so you can see all the stocks from each sector. Here are the 11 sectors of the economy that we'll be covering, and remember, each sector is made up of industries that serve a common need. Here in the financials, we're looking at companies within investment management, insurance, real estate, and banks. The sector has almost identically matched the return on the market over the last year and 5-year period. In fact, you can see how closely the financial sector stock fund has followed the S&P 500 since 2009. Of course, the sector was the hardest hit in that financial crisis, losing 80% of its value. So even after that strong rebound over the last 10 years, this one is still one of the few sectors that isn't terribly expensive right now. Now we'll get into Buffett's best bank stocks, but first I wanted to show you 3 financial ETFs that you can use to get that broader exposure. Now these are going to be great if you can't find individual stocks you like, or maybe if you just want an investment into that entire financial sector. First here is the Financial Select Sector Spider, ticker XLF, with its 2% dividend yield and exposure to 67 US-based companies in the sector. The fund gives you exposure to the U.S. financial sector by size, so we see that banks are a big chunk of that, but you've also got solid coverage here in the capital markets and insurance. The fund charges a respectably low expense ratio of 0.13% and has produced a 10.6% annual return over the last decade. Now the Spider S&P Regional Banking ETF, that's ticker KRE, gives you a little more focused investment in those U.S. regional banks and a 2.3% dividend yield. For years, analysts have been talking about a wave of consolidation in these smaller regional banks, but it hasn't quite happened yet. And these are solid banks though, with financial flexibility and benefiting from that American consumer. If the wave of consolidation ever does come in, this could be the fund to have. The ETF holds shares of 122 regional bank stocks with an average market cap of just $10 billion. So we're not talking about $295 billion Bank of America here. I also like the fact that no single stock is more than 3% of this fund. For international exposure to the theme, you might go with the iShares Global Financials ETF, ticker IXG, and its 2.7% dividend yield. Now, the fund is still mostly invested in U.S. financials, with 49% of the assets domestically, but you also get some diversified exposure to Canada, the Eurozone, and other markets. Here, a look at the Global Financials Fund against the U.S. financial sector. That global fund is the green, and the U.S. financials is in red here. One look is enough to make you think twice about this fund. Europe has had a much harder time recovering from that financial crisis, and the banking sector has been smashed over the last few years on negative interest rates, but there will come a time when this is just too damn cheap to ignore. Now let's look at what Warren has picked for us and the best bank stocks to buy. I analyzed the financial sector stocks in the Berkshire Hathaway portfolio to find the best 5 in the group, the top 5 to put on your radar. Buffett actually has 14 financial sector stocks in that Berkshire portfolio, so not only does he hold more than 40% of the assets here, this one sector is also nearly a third of the companies he owns. We'll look at those top 5 stocks from the smallest to largest investment, counting down to Warren's biggest bank bets. The Travelers Companies, ticker TRV, is one of Buffett's smallest investments with only $794 million in shares, giving him control of 2.3% of the company. Now, Travelers is a property and casualty insurance company with 70% of its premium revenue from business customers. Like most P&C insurers, the company has been hit hard over the last few years by a wave of natural disasters, from everything from hurricanes to wildfires, but has been able to adjust premiums higher. Now, this one is a little uncharacteristic for Buffett because most of the insurance businesses in that Berkshire Hathaway portfolio is just owned outright. The industry throws off an amazing amount of stable cash flows that Buffett can use to invest in other projects. In fact, we've seen a lot of talk lately about Buffett's $128 billion stash of cash and just gossip over what he's going to do with it. Holding that much cash on the balance sheet is hitting returns, so he's under pressure to invest it or buy back shares. Now, I actually think Travelers is one of his most likely acquisition targets. It would fit in with that private portfolio of insurers and is not particularly expensive at this point. Shares trade for 15.9 times earnings and have come down 13% since July of this year. Earnings are expected to surge 25% over the next year, though this is one where the street has been horrible at predicting earnings and management hasn't really done a good job at doing guidance. I wouldn't expect earnings to be quite as high as expected, but even a decent 15% increase would mean the shares are only trading about 14 times earnings. That would be a steal for Buffett in an industry that trades closer to 20 times earnings, and I'd expect him to pick up more shares even if he doesn't make a bid for the whole company. Of the 9 analysts covering shares of Travelers, the low target is around 126 per share with a high at 162 each, or about 21% above the current price. M&T Bank, ticker MTB, is one of the largest regional banks with 126 billion in assets and branch business across 8 states along the East Coast. Buffett and Berkshire hold a relatively small $890 million in shares to own 4% of the bank and have held the position for nearly 3 decades. Buffett always looks for great management, and you see it here with M&T Bank. The company had the highest net interest margin among 12 competitors in the third quarter and the second lowest percentage of credit losses on loans. 2/3 of the bank's income comes from loans, so that low rate environment hasn't been great for M&T, and the 3 rate cuts in the last year haven't helped. The yield curve has readjusted. Those longer term rates, which are the bank's income, have increased over the past month, while shorter term rates, the bank's costs, are still fairly low. So that should help to drive greater profitability in 2020. Shares trade for 11.7 times earnings, which is about average for the regional banks, maybe a little on the low side. With the bank's history of great management, I would expect this one to trade closer to 13 times earnings per share. Earnings are expected lower by 3% over the next 4 quarters, mostly on that rate environment though. Even on a slight earnings decline and a 13 multiple on that price to earnings ratio, I'd expect shares to be around $175 over the next year. That's just a little bit above the average analyst estimate here, with a low target of $150 and a high of $200 per share. American Express, ticker AXP, is where we really get into Buffett's big investments with $22 billion in shares, which gives Berkshire an 18% ownership in the company. So this is a big bet for Buffett, not just on that dollar value alone. Owning nearly a fifth of the company, Amex is Buffett's 3rd largest controlling share, only behind Kraft Heinz and DaVita. And to put this in terms of payment processors, Berkshire Hathaway's $22 billion bet on American Express is almost 8% of his total portfolio. Now that compares to less than 1% of the portfolio invested in each of the other two big players, MasterCard and Visa. Amex's advantage has always been in the business traveler and the corporate card market. Spending by cardholders in this market is much higher than the consumer side, so that's really driven higher rates Amex can charge to process those payments. Shares trade for 15 times earnings, but those earnings are expected 10% higher over the next year, which could be very strong growth. One warning though is that while management has done a good job of beating expectations, that fourth quarter, the next one reported, is typically the weakest. You can see here they missed expectations in 2 of the last 3 Q4 releases. Analysts see the shares around $122 each on the low end or $149 per share at the high end over the next year. This one doesn't pay much of a dividend at just 1.4%, but the potential for that price appreciation is definitely there. Wells Fargo, ticker WFC, has been one of Buffett's longest running bank bets with $22 billion in shares dating back to 1989. Berkshire Hathaway owns 10% of this bank, but it's been pretty much dead money since 2014. That 3.8% dividend yield is very high, but I'd expect pressure to be put on management to start moving that stock price as well. Shares trade for just 12 times earnings, which is a far cry from the days I remember as an analyst when Wells Fargo used to trade for way higher than all the other bank stocks on a PE basis. Management has not done a good job at guiding expectations here, and earnings are expected lower by 6% over the next year. All this has led to the bank's CEO Tim Sloan stepping down in March and replaced last month by Charlie Scharf. That's usually a good sign, but investors might have to wait a couple of quarters to really start seeing those improvements from new programs. Still though, Wells is a good value play in bank stocks and one of the largest in the US. It's much more of a consumer bank versus some of those other mega cap banks like JP Morgan or Goldman Sachs. Now, analysts have a low target of $46 a share and a high at $60 per share. So while the price appreciation might take a year or two to really take off, I think you can be happy collecting that almost 4% dividend yield while you wait. Bank of America, ticker BAC, is Buffett's largest bank holding with a $31 billion bet and ownership of 10% in the company. Now, B of A made some horrible and badly timed acquisitions right around the financial crisis that have really weighed on the shares. It saved Merrill Lynch from bankruptcy, buying it in 2008, but still paid way too much. The acquisition of shady mortgage lender Countrywide Financial has haunted it for more than a decade as well. Now, the bank has been able to move past these though, and shares have taken off since 2016. Shares only pay a 2.2% dividend, but have produced a 15% annual return over the last 5 years. Shares trade for 12 times earnings, which aren't as expensive as you would expect given that strong trend in returns. Better still, though, is that earnings are expected to climb 9% over the next year, and this is one where management has been able to consistently beat those expectations. Analysts have a low target at $28 per share and a high around $45 each over the next year, while the average target is right around that current price. Click on the video to the right for the 5 oil stocks that should be on every investor's radar in 2020. Dividend yields as high as 10% and upside price appreciation. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.